Friday.
Oh, it was so smooth this.
It was.
Yay.
Happy Friday, everybody.
No, it says is starting.
Oh,
Hasn't started yet.
Great.
There it
There we
is.
go. Hello! Happy Friday, everyone.
Friday.
Happy almost weekend. This is Finance Friday. This is the show where we give you the information you need to help you grow and protect your wealth. And I am Amy Novakovich, and this is
Beth Hedgesmore.
Hi. Follow us on social media. We obviously have all the socials. Facebook. What do we have, Beth?
Facebook,
LinkedIn,
Pinterest, LinkedIn, Twitter,
Instagram.
or X, I should
Oh,
say.
we have a lot of videos on YouTube.
And we even have a TikTok. I haven't given that a lot of love lately, though.
No. And I went through our YouTube channel the other day. This is a total side step. Sorry, this is the ADHD kicking in. But I went through our YouTube channel the other day and I found our videos of Hope when she was 4.
Yes.
So my daughter Hope is now almost 12. She'll be 12 in a month. And there's three videos of her on there when she was 4. They were
She's super
so cute. She was fun. She was pretty educated.
Yeah, she was.
What is a 401k? It's when you retire and don't work anymore.
Yep.
Super funny. Anyway, sorry, total sidestep here. So we are talking a little bit confrontational today, a little controversy around this. There's a lot of good people in our industry that just don't know the answers. And those good people might be at a place, which I can relate coming from a bigger firm. A lot of the people here can relate coming from a larger firm. That you might be a little strapped because of the model of your firm. So your job is to take in 8 meetings a day, and you really don't have time to really educate yourself on any of the changes or to dig into the details of a client situation. And so it's just the nature of the beast. It's not necessarily that you're with a terrible human, which obviously there are bad people in every industry. So there are some bad people out there. I'm just saying what we're talking about today doesn't necessarily mean they're just an awful human. That's not what we're saying. So,
Correct.
Again, with laying the groundwork, everything we always say on this Finance Friday is not a recommendation.
Correct.
We don't know your situation. But we certainly will say some things to get you thinking.
Yeah, and we actually thought of this last night. So I was in
had a
Amy's
situation.
office. Yep, I was in Amy's office, and one of our advisors came in and was just absolutely flabbergasted that this was said to one of our clients. We have a client.
Shouldn't be too shocking though.
Well,
Because I was just talking with him about it. I'm like, the advisor just doesn't know taxation.
correct,
Like it's that simple. So Stephen has her tax return,
correct.
and he showed me. He's like, even if she did realize all the capital gains, we'll tell you the situation, I guess, in a second. We're having a little side conversation right here. Even if she did realize the capital gains, she wouldn't have owed taxes because her taxable income was low enough. So, should I back up and say the whole situation?
There you go. Go ahead, Amy.
Okay, client coming over from a
large
larger
firm. Yeah.
firm, and classic situation, she's become just another number, and so doesn't have a regular advisor anymore. Actually, now has a call center advisor, and that's not a great place to be when you actually need financial help, when you really need financial advice. Which who doesn't? I mean, that's kind of
The point. Yeah.
that's kind of the point. But anyway, so she gives all her information here, her statements, her tax return, all this, decides to move over. So she calls to let her old financial advisor know, and his comment was, if you move that, you're going to owe, what was it, $26,000 in taxes?
Which would scare anybody.
Obviously. And so she calls and she's like, should I be making this move? I don't know what I'm doing. So it's a scare tactic, number one, before he educated himself. Nobody likes to lose clients. And so, yes, I understand. Again, this person maybe is not a terrible human, but just doesn't know enough, right? Has never even looked at her tax return to understand what he just said is not true, number one. And number two, our advisor called him and was like, hey, what are you talking about? Can this not transfer? Like, would you have to liquidate everything? Because most of the time, things can transfer what we call in kind. Meaning, if it's at, making it up, Merrill Lynch, and it comes here to Fidelity, we use Fidelity and Schwab. It just shows up. Same positions. Identical. It's called in kind. And so nothing gets sold. So there would not be any tax consequences because we're not just selling everything. But he didn't know that, right? So he's making assumptions that we're a new advisor. We're just going to wipe out everything, sell everything, take all the capital gains, and she's going to owe all this taxes. So I would say some red flags is kind of what we're talking about today. When you get extreme answers,
like that.
So if you do that, then this bad thing will happen. Or if you don't do this, something bad will happen. I would say you need to educate further. So when we answer our clients, we say things like, okay, we wouldn't recommend that because of this, this, and this. Here's why you would do it. We just don't think that the risk outweighs the reward. Something like that. So we're more on the educational side of here's why you would, here's why you wouldn't, here's our recommendation.
Right.
You know?
Here's
Keeping it
the
simple.
here's we're cutting through the noise for you. Here's the good, bad, and
Then the ugly, I guess.
yeah, good, bad, and ugly.
Yes. But yeah, I would say extreme answer. So that is one thing.
So yeah, so don't take your financial decisions based on assumptions. So,
Right.
and this is why too, when we talk with people, when we say you should get a second opinion, not because we think your current person's doing a bad job, it's because it gives you that extra amount of peace
For
that
sure.
I'm on the right track.
Well, and just a little bit more of education. Not all advisors also play in the sandbox of estate planning and tax planning
Correct.
and even cash flow analysis. Really, they're just investment advisors.
Correct. Which
So,
brings you to the next part
yes.
of it doesn't cost you anything. Now, I have said this to people when we've talked about it in the sense of nothing's going to come out of your pocket when we're doing some of the things that we're doing for you. However, there is costs associated. One of the things that we get asked about in workshops and things that we do is how do you get paid? And we discussed that we are a fee-based firm. So do we have products that we can sell? You probably want to talk more about that than I do.
Yeah, so when we say fee-based, so there's different ways that advisors, and actually I do have a whole YouTube video on different ways that advisors get paid. And so there are Series 7 brokered advisors. So when you're a broker, right, there's typically a commission associated. So back in the day, you know, let's call it 2 to 3 decades ago, stock brokers would call and get commissions on placing a stock trade. Now those days are kind of gone, but not entirely. And then the big one you need to look out for is like mutual funds. So if you paid a front load fee on mutual funds, you paid a commission. Or if you're paying a commission on an ETF to buy an exchange traded fund. Now we're getting a little in the weeds on these things. And we're not going to educate on every single type of investment today. That's again on the YouTube channel and again on a one-on-one conversation based on what you actually own. The point is that there's different ways advisors get paid, and the first way is commission. When we say fee-based, we charge a flat fee, a flat percentage fee. It's not even really flat because it's moving with the value of the account. When I say flat fee, I just mean it only changes if the asset value changes. It doesn't change by the amount of trades that we place, is what I'm trying to say. It's not like if we did more work this year, you're going to get charged more fee.
Correct.
That's not the way it works. So what I'm trying to communicate is the fee is based on the amount of assets that you have. It's a percentage based on the amount of assets. So whether we place 5 trades or 500 trades, you are still in that same percentage fee. So it doesn't go off of the amount of work that we do, the amount of planning that we do, the amount of times that we talk. It goes based on the value of your accounts. So are we growing the value of your accounts or are we not growing the value of your accounts? That's what
Correct.
fee-based advisor means. And then there's different fees. So there might be a one-time ticket charge if we place a trade for a random investment type. Like let's say you call and you wanted like a penny stock, which I have actually stopped doing with clients. But I have done it and advisors do it. You might pay a $20 ticket charge to buy that stock because it's not publicly traded on the New York Stock Exchange. It might be traded on the pink sheets, the over-the-counter markets. Anyway, I'm getting way in the weeds. I apologize. The point is, there's different ways your advisors get paid. If you want to know how yours gets paid, just call. And we'll walk you through how they might be getting paid. But when someone says, oh, that doesn't cost anything, usually it needs a further explanation. As you can see, I can't even try to break this down without getting into another conversation or another level of needing explanation. So it certainly needs further explanation. Another one of my favorites, and we're not endorsing nor going against annuities. The point is that when someone says there's no fee on this annuity, what Beth just said was it's not coming out of your pocket physically, but that advisor is getting paid a commission. We have both fee-based and commission annuities.
Correct.
So it certainly depends on how the advisor is paid and how the product is structured. Not only that, But if you have what's called a cap, if they're capping you on return, that in a way is a fee. So if the S&P did 20%, S&P is just the market, guys. If I apologize if I'm talking over somebody's head. But if the market is up 20% and your cap was 9, is that not a roundabout fee? Like you received a lesser return in exchange for lower risk, but the point is somebody needs to educate you on that
Right.
you're giving up something that is foregone doesn't mean it's just not a fee because out of your pocket. So needing further explanation. This was not meant to confuse people. This was meant to get people to ask questions,
Correct.
to dig in, okay? And if you need any further help on that, you know where to look.
And our last one and our favorite one is, it's kind of a two-part. We hear, it's fine. The market always comes back, which also relates to, you don't need a plan. Because we just do this 4% rule of taking money out of your accounts and you're going to be fine. So
I'm going to say something controversial.
that's great.
It also means the advisor doesn't have a plan.
Correct.
So when you're getting told, like, you're okay, we've done the 4% rule, you won't run out of money, and you might not, and that's fine.
Mm-hmm.
But there's certainly no action plan then for investments. Like, there's certainly no action plan for if the market goes down. You're going to be one of those that just still flail. What do I do? Is the market going to go down more? Are we, what does this mean for my money? What does this mean for my income? Those are all things that can be avoided if you just have an investment plan. So we will buy when the market does this. We will buy when the market does this. What will you buy? Oh, we'll buy this, this, and this. What will you take gains on when the market is up? What strategy do we have? Do we have a dividend strategy? When are we pulling income? Where are we pulling the income from? You need an income plan bumped out 10, 20, 30 years. You may not run out of money, but you need an income plan for taxation. The whole bit of taxes is just getting missed. People wonder, am I overpaying on taxes? The answer is probably yes. Like, you need someone who really dives in, who really has that proactive planning mind instead of just being reactive. Accountants and financial advisors. And if those two aren't talking, then that's an even bigger problem. You don't have a plan.
Yep.
And if you're told you don't need a plan, then that just simply means the professional you're paying doesn't have an answer. They don't have a plan.
Yeah, because investments aren't the same as a plan. It's two different
100%.
things. So that's why sometimes you'll hear us talk about, like, you might have someone that you've worked with for 20, 30 years, your family's worked with, and they do great at managing your investments, and they've done a fantastic job for you. But that doesn't mean they have this next extra step. And that's nothing
And
against
that doesn't
them.
mean you couldn't be doing better. That doesn't mean you've actually overpaid on
Correct.
taxes and
Correct.
received return. So over 10, 20, 30 years, that adds up sometimes to tens, hundreds of thousands of dollars, if millions of dollars. So we certainly need to be looking at it. And you can't just be told to calm down. Don't worry, the market's going to come back. Don't worry, you're diversified. Don't worry, we were prepared for this. Okay, so what are we doing about it? Oh,
Right.
well, don't worry. If you're being told you're fine, you're not fine.
Yeah, that's another favorite line that we have.
You're fine.
You're fine.
Yeah.
Everything's fine. Everything's on fire and we're fine, right?
Without an explanation. I mean, I'm happy to tell a client, you're fine, but with my explanation or with my pieces of my charts and saying, this is why you're fine.
Right.
You're okay. Let's look at it. I'm going to show you why you're fine. I mean, I've actually had that conversation with a client who called me in tears one night because she was super nervous that she wasn't fine. And I said, you know what? I think you're fine, and I'm going to show you why I think you're fine. I'm going to put it in the plan. I'm going to run some analysis, run some numbers. I'm going to run different scenarios to show you different things that could happen in your life and how it would affect your net worth. And then taxation, we're going to show you how efficient we are on taxes. And afterwards, she was so grateful and felt better than fine. You should feel better than fine. She felt really good and confident.
And we have plenty of people that we brought on board that took a little longer than other clients because they just were nervous. I mean, this is money they've worked for.
Decision.
Right. They worked for it their whole life. Or it was maybe something they were able to inherit, or a sale of a business or something. They've had this income, or this, not income, but they've had this investment come to them, and they want to protect it. So we get that it could be nerve-wracking. So if you have somebody who's not willing to lay it all out and show you how it's going to work,
Then
that's where the second opinion comes
get
in.
a second opinion.
Yeah.
Mhm.
Anything else?
I don't think so.
She
I feel like I talked about a lot of different
That's
things.
okay.
But again, it's not to confuse you.
We want people
in
to
a
ask
meeting, we
questions.
only have 15 minutes here that we try to keep it to. But in a meeting, I can get up, go to the board. I can show explanations on paper. I can give examples. It's just hard to do here. But conceptually, what we're trying to do is draw attention to the questions that need to be asked, because a lot of people come to us and say, I don't even know the questions to be asked. So that's what we're trying to help with.
Yeah, and last month was a busy month for Nova and for all of us, so we had a lot of Fridays that we missed. But May was Military Appreciation Month, and we are read every Friday to remember everyone deployed. Remember everyone deployed. And we take that very personal. We actually have a post I just did about we are experienced in working with people who have military or first responder retirement situations. So even if you've got that lovely pension, still means you need a financial plan, and because that's, again, investments or that is not, it's not a plan. Anyway, so
It's true.
we do work with those. We actually have a veteran in the office, and several of us have first responder families. So we eat, sleep, and breathe it, literally. So thank you for your service for our country and for our communities. And also, Amy mentioned it in the beginning, but if you are a financial professional who feels a little bit boxed in at what you're doing and want to be able to help your clients more, we're always hiring a sweet, jokey, certain type of people.
We are looking for a certain type of person that goes above and beyond in the level of care for clients.
Correct.
Really, really enjoys what they do.
Right. So,
So.
we're that place if you're that person.
Sounds good.
All right, and that's all for us. So welcome June. We're halfway through 2026 already.
Wow.
Hope everybody is enjoying their time. We're going to see you again hopefully
Hopefully.
next Friday. We never know. It's
We
one of
never
those
know.
things.
We'll figure it out.
Take care. Yeah, you never know.